Let's bring on board Deepak Khetrapal, Vice Chairman and MD at Orient Electric, to talk about their numbers, what is their growth story ahead going forward as well. Thank you so much, Mr. Khetrapal, for joining in with us this morning on ET Now. Let's start by talking about, your Q1 numbers. Despite, that unseasonal rain issues that were there, impacting mainly the summer portfolio, we have seen a decent growth coming in this time, and that consumer durable segment, that has seen a good growth. Do you expect this growth to continue, given that your peers have not managed to see this good growth this time? Do you think that you would be able to sustain this growth?
First of all, good morning and thanks for having me here and addressing the shareholders and the rest of the audience who look at us. You picked up a wonderful point that yes, the season has not quite favored us and the whole industry. But despite that, the numbers that we have reported are something that we really feel proud of. And I must acknowledge that these numbers have not come by accident. They obviously are a result of the very robust strategies that have been put in place in the company for a while now. Strategies which include really premium products which bring us not just more top line, also more margins. The fact that we've revamped our go-to-market in many of the states which are underperforming, so those have started kicking in. Our new channels, which include e-commerce and modern retail and all, they clocked in a growth of nearly 60%. The fans themselves, despite an unseasonal rains and all, are 18% growth. So every little engine that we've been sort of revving up inside the company has kicked in the first quarter, and that's what has delivered not just a very good top line. We've also delivered, I think, the contributions, the margins, which are very healthy. There's a gain of nearly 3 to 4% in almost every category, or percentage point, not percentage gain, 3 percentage point gains in terms of gross contribution in every single product line that we are in. So it's a much more broad-based growth in top line and in contributions. One question that I would like to address up front, even before you come to it, those additional volumes, additional revenue, and additional contribution has not quite shown up in the final EBITDA or the bottom line numbers. And we are very conscious of that. And the reason behind that is very simple. We are still in the process of making investments in the brand, investments in the market, investments in the organization, the people that we have hired in the recent past we are hiring. And a very, I would say, a rather expensive investment that we are doing in terms of rebuilding, reconstructing the company, including having consultants, which costs a lot of money right now. So maybe all that has weighed in on the bottom line. But the key developments to watch are the growth in the volumes and value in the market and the cross contributions. Fixed costs, please take them as our investment as we rebuild the company. And they will be here for a while with us. But as these engines keep coming in, we'll keep having more and more growth to defray all the fixed costs and its investments. That's my view on the overall performance.
Deepak, so given the fact you're saying that these investments are likely to continue, should we expect the margins to just stay around that 6% mark? And when do you see all of these investments actually having an impact in terms of revenue? When do you see the impact happening on the profitability front as well?
So you asked two questions. Sure. Impact on revenue, immediate. Impact on contributions, immediate. Impact on final bottom line, maybe a little lagged, maybe another quarter or two. But they are being sort of, in a way, these investments are being made to actually find the operating leverage that will absorb it, right? So that may take a quarter or two. Let's say even this full year, if we keep investing, but what we are preparing ourselves for is not just the next quarter or the quarter after that, but for the long run. And those investments are absolutely not just essential, they're key to our becoming the company that we want to be.
Mr. Khetrapal, also just want to understand in terms of, the lighting segment when you talk about it, could you take us through the demand trends that you have been receiving or inquiries that you are receiving on the B2B front, as well as in the B2C segment, lighting segment growth seems a bit weakish in this quarter. How is that shaping up now?
Well, interesting question again. Lighting, as you pick, it's B2C and B2B. The B2C segment, which is largely lamps and things like that, on that, there's a new technology that has come into the LED lamps, which is driver on board. Earlier, there used to be a separate PCB to drive the LED light. That has brought down the cost of the product, which has been passed on to the market. So the lighting products have become a lot cheaper compared to what they were. So we have had volume growth, but not the value growth. That's barely 2.5%. On the B2B side, we have actually not just a very strong inquiry bank for which we are quoting today, but even in the last quarter, our B2B growth has been 40%. So the idea is for us not to just remain a B2C company in lighting, but to be more broad-based in B2B and in B2G. I mean, the government sector, which consumes a lot of lighting products in terms of in smart cities, in street lighting. So we're broad-basing our product range completely, and also our selling and execution capability, so that we have a much better share from the B2B and B2G markets as well. So all that is still work in process, but as we keep moving forward, we will not lose our market share in B2C at all. But the bulk of the growth actually might be coming from the B2B side, the institutional side, and the margins there remain quite good. And with the inquiry bank that we already sit on, even if we convert a small percentage out of that, it should show very good growth, even in value terms for the year as a whole.
Okay, Mr. Khetrapal, on that note, we'll let you go. Thank you so much for making time and speaking with us. But